Hello, and welcome to our video on investing in monthly dividend stocks and the power of compounding. In this video, we'll be discussing the benefits of investing in stocks that pay dividends on a monthly basis, as well as the power of compounding and how it can help your investments grow over time. Before we dive into the topic of monthly dividends, let's first discuss what dividend stocks are and why they might be a good investment for you. Dividend stocks are stocks that pay out a portion of their profits to shareholders in the form of dividends. These dividends can be paid out on a quarterly, semi-annual, or annual basis, and some companies even pay dividends on a monthly basis. Investing in dividend stocks can be a good strategy for a few reasons. First and foremost, they can provide a steady stream of income to investors. This is especially appealing to those who are retired or near retirement and are looking for a reliable source of income to supplement their savings. In addition to providing income, dividend stocks can also offer the potential for capital appreciation. This means that the value of the stock itself can increase over time, resulting in even more profit for the investor. So, what makes monthly dividend stocks such an attractive investment? Well, one of the main benefits of monthly dividend stocks is the frequency of the dividends. As the name suggests, these stocks pay dividends on a monthly basis rather than quarterly or annually like many other dividend-paying stocks. This can be a big advantage for investors who rely on their dividends as a source of income, as it allows them to receive a consistent payout throughout the year. Another benefit of monthly dividend stocks is the potential for compound growth. When you receive a dividend payment, you have the option to either spend it or reinvest it back into the stock. If you choose to reinvest the dividend, you'll be able to buy more shares of the stock, which means you'll receive even more dividends in the future. This is the power of compounding at work. Now that we discussed the benefits of monthly dividend stocks, let's talk about how to invest in them. The first step in investing in monthly dividend stocks is to do your research. This includes looking into the financial health of the company and its track record of paying dividends. You'll also want to consider the yield, which is the percentage of the stock price that is paid out in dividends. A high yield can be a good indicator of a strong dividend-paying stock, but it's important to keep in mind that there are no guarantees when it comes to investing. Once you've found a monthly dividend stock that meets your investment criteria, the next step is to decide how much you want to invest. It's generally a good idea to diversify your portfolio by investing in a variety of stocks rather than putting all your money into one stock. Finally, you'll need to decide whether you want to receive your dividends in cash or have them reinvested back into the stock. As we mentioned earlier, reinvesting your dividends can help your investments grow through the power of compounding, but it's ultimately up to you and your investment goals. As we mentioned earlier, compounding refers to the process of reinvesting your dividends back into the stock in order to buy more shares. This can help your investments grow over time, as you'll be earning dividends not just on your original investment, but also on the dividends you've reinvested. To illustrate the power of compounding, let's look at an example. Let's say you invest $1,000 in a stock that pays a 5% dividend yield and you choose to reinvest your dividends. After 1 year, you would have earned $50 in dividends, which you could use to buy more shares of the stock. The following year, you would earn not just on your original $1,000 investment, but also on the additional $50 in dividends that you reinvested, resulting in a higher payout. This process continues over time, with your dividends earning dividends of their own. As a result, your investment can grow at an exponential rate rather than a linear rate. It's important to note that compounding is a long-term process, and it may take several years before you start to see significant growth. However, the power of compounding can't be denied, and it's one of the reasons why investing in dividend stocks, particularly those that pay dividends on a monthly basis, can be such a lucrative strategy. So there you have it. Investing in monthly dividend stocks can be a great way to earn a consistent stream of income and potentially see your investments grow through the power of compounding. It's important to do your research and carefully consider your investment goals before diving into the world of dividend stocks. With the right strategy and a bit of patience, you can take advantage of the many benefits that monthly dividend stocks have to offer. Thank you for watching, and we hope you have a better understanding of the benefits of investing in monthly dividend stocks and the power of compounding. Be sure to like and subscribe for more great content from Xaver.